Hello again and welcome back to London. Supermarket wars has been one of the major themes in the FTSE over recent months, and after the earnings season all the major listed retailers have been left battered and bruised. So has WM Morrison, the latest to report, actually done anything worse than the other retailers? Well, that's what I asked Augustine Eden from Accendo Markets.
Morrison's is quite low down in the big four. It is the fourth. So yeah, these results were specifically bad for Morrison's because of their size. You know, they're the run to the litter in a sense.
Yeah.
They've got most at risk from this supermarket war. Arguably, though, they've also got the most to gain from it. So it's a real tough one for them.
Yeah. What did you make of the Sainsbury's results? Because they weren't very strong either.
It's been somewhat of a theme with the big supermarkets. You know, we've got the discounters coming in, taking market share. They've got about 10% of market share, and the big four have really been caught napping. It's the same story throughout, really. They've been very comfortable. They've had a large monopoly over the past, many years, and now with the recent sort of financial troubles. Different things have happened, also with the rise of technology and the internet. We've had entrepreneurs coming along. We've got the likes of Accendo offering internet shopping. That's become very popular. The weekly shop is becoming less popular. I'm a basket shopper. Many of us are nowadays. It's the big supermarkets have got this problem of having these huge buildings to maintain. And that's really hurting them.
We look at Tesco's, we look at Morrison's, they both have new CEOs. If you were the man in charge of those big supermarkets, what do you think are the most important areas they need to address?
Well, certainly the property side of things, I would say. They own a lot of property, it needs to be serviced. That's very expensive. But what I do notice about the CEOs of these organisations is that they've been around for a while. We frequently see them move from Tesco to, in the instance of Morrison's CEO, he worked at Tesco before. They're the old guard. They're schooled in the what's now maybe considered as the old way of doing things. And what I feel is important is an integration of recognising the new trends in consumer behaviour and integrating that with the traditional ways of running supermarkets, because in order to move forward with this, they're going to have to compete with ideas such as filling a big room full of food and leaving it there and letting the customers find it. They're going to have to add value by providing a more personalised service, increasing the use of technology to service the needs of the consumer nowadays. And consumers are arguably spending more on luxury goods now. They've got a little bit more disposable income, supposedly, in the current economic climate. So they've got a little bit more to spend in order to be looked after better. So that'll be really important to watch in the coming months for the supermarkets. Yeah, and just to finish off this supermarkets bit, in terms of the current price levels of those supermarkets, I was looking at a one-year chart for the big three, the three that are listed anyway. It's strange, Morrison's is actually quite flat on the year, Tesco's and Sainsbury's are very much down on the year. Where do you think the price movement goes in terms of those three share prices? Well, that's an interesting one as well. I mean, Tesco's obviously it still is the market leader, arguably, but it's had a rough 12 months. It had an accounting scandal to deal with that affected the price and added volatility into that one. Morrison's, as I said, it's always lagged its sector peers. And it hasn't really been in the news in a big way, in quite as a dramatic fashion as its peers. So moving forward, it's going to stay very, very tough unless we see some ideas. I mean, we need to see some fresh ideas from Morrison's and Tesco's and Sainsbury's in order to start moving things forward. Are the stocks reasonably priced now? Perhaps for a very long-term investor. But as it stands, you know, they've all reported, it's all been disappointing. The shares have reacted in due course, and at the moment I don't see anything happening anytime soon until we really do hear some really inventive ideas, to be honest.
Yeah, but let's broaden out to the wider reporting season. I know you've been looking at everything, but Lloyds has caught your eye.
Yeah, Lloyds caught my eye simply because banks have been bashed about a bit recently, obviously. Lloyds was the only bank to beat expectations in its report. It took a big hit spinning off TSB, managed to do that well, evidently. And the share price is still sub £1. Let's not forget. So that's still potentially quite attractive. To put it into more context, you know, its own sector peers have all had to put aside billions for various rigging scandals and fines that are yet to be finalised by the authorities. HSBC is threatening to leave the country. Is that good for the share price? Is that bad for the share price? That's all being debated in the press and in a lot of places. Lloyds just seems to be very, very positive, and it's got a good outlook, as I said, an attractive share price. So yeah, that caught my eye, and it's good for the industry as well, really.
Well, thanks to Augustine for his analysis of the FTSE. Stay tuned to Duke's Copy TV for more of the same, but from London. Goodbye for now.